Welcome to the IMFG Quarterly Market Update. My name's Scott Douglas, I'm a Director at IMFG, and today I have here with me Dr. Steve Garth, our Chair of our Investment Committee, who's going to provide some insights onto the recent market activity. So Steve, what's been happening in Australia to start with over the last quarter?
Yeah, Scott, when you look at the last quarter, it might surprise viewers to know it's actually a positive number. Very small positive number, but the quarter's positive despite all the bad news. Ever since the 1st of January, the market's sort of been generally on a path down, and in fact it's down by 9.6%, on the year to date. Why the quarter's a little bit positive is really from about the middle of June right until the end of August. There was quite a rally in the market, and they call it a bear rally. It just means that the market's going up in a period where overall it's a bear market. And that's why the quarter has got that small positive return, because it was quite a strong rally for most of the quarter. And then, of course, at the end of August, the chairman of the Federal Reserve in the US said, look, we're going to do whatever it takes to kill inflation. And so the market finally got the hint that, look, interest rates are going to keep going up until inflation is tamed.
Going overseas to the international markets, how have they played out over the same period and what's going on there?
Yeah, well, obviously it's a similar story. Australia's doing a little bit better. I mean, that's not much help when you're an Australian investor because you're still down 9.6%. But other markets are down more than that year to date. And the reason for that, Scott, is if you look at the developed markets or the international markets, and most clients have got a diversified portfolio that's got international shares as well as Australian shares, then a great part of the international market is the US. It's about 65%. And the US has really been one of the markets that's fallen the most. The S&P 500 down by more than 20%. And the NASDAQ, which is where all the big tech stocks reside, that's firmly in bear territory, down by 30%.
Right, okay. So that's a big part of people's portfolios, but what about bonds? That's also had an impact since the beginning of the year. Where are we sort of sitting with that now year to date in the last quarter?
Yeah, so this is not a great story. If you thought equities was not a great story, then the bonds is not a great story. Now, if you have a look at the chart here, you can see the US and Australian 10-year yields pretty much steadily climbing up. The Federal Reserve said they're going to keep raising rates, then yields kept going up. Scott, when yields go up, bond prices go down. So it's a negative, 10% for the Australian bond market. And if you're in the global bond market, again, biggest part of that, once again, is the US, then that's down closer to 13%.
On that note, would you suggest that there's any major movements? Our clients are positioned predominantly in shares and bonds. Is that at this point in time a well-positioned portfolio?
Look, absolutely, Scott. Look, we just put up this last chart here, which actually shows the long-run performance of the stock market, basically the international stock market, over 30 years. And there's lots of wobbles in there, but in general, it keeps going up. I think one thing to keep in mind that what we're witnessing at the moment, while it's not pleasant, it's actually just a normal part of the investment cycle. It's not like when COVID hit a couple of years ago, that was really unknown. So while it's not pleasant, markets do recover fairly quickly and they keep on their path in an upward movement. So it's all about being disciplined, staying for the long term.
Yeah, and we've had a long period of growth, and this is part of the economic cycle, and we really believe that if clients stick to their portfolios, they will achieve the outcomes that we're trying to get there, which will happen over those time periods. Well, thanks very much, Steve. That's been great, a great insight. We look forward to talking to you again next time.
Terrific. Thanks, Garth.
Steve. Thank you. Thanks.